Greetings, this is Dwayne. We're recapping the S&P 500 E-mini futures for April the 2nd. April the 1st was a Sunday. So what you see right here is the Globex session. Now let me show you this. When we did our last recap, which was from Friday the 30th of March, we had a bullish cross and we had a pullback. Now, we don't teach you in the live trading room or as a partner to hold positions overnight or over the weekend. We teach you the trade setups. We teach you how to use the indicators. If you decide to go off the beaten path, that's entirely up to you. And over time, you will go off the beaten path in one way or another. If you had bought this pullback on Friday afternoon, just before the market closed, and if you held it over the weekend, here's what happened. Trade setup, entry. Sunday night on Globex. Market opens. Okay, the entry was down at 1403.5. Globex opens at 1407.25. And price eventually rallies up to 1410.25. So from 1403.5 to 1410.25, almost 7 points. Again, that required you going long into the weekend, holding your position over the weekend, and benefiting from the fact that the market gapped higher on the Globex open Sunday night and continued to trade even higher. Okay. So let's get in now to the actual trading day. It's still midnight. This line right here, this is April 1st, midnight Chicago time. We're now 1 a.m. Chicago time on Monday morning, April 2nd. The first pullback to the BBC. We're still in a bullish pattern here. The MA1 above the BBC, the first pullback. Okay. If you took that trade, your entry would have been 1406.25. And there's no reason to measure anything else, because if you took that trade simply based on a pullback to the BBC and nothing else, no cycle indicator, no slingshot, no DMT, no combo, no nothing, no weekly trading zones, then we don't have to measure it because it's easy to see the trade got stopped out. Price pulled back to the BBC, never went any higher, just kept falling. Okay. Now, next trade trigger right here. Except this time the direction is short instead of long. And hopefully at this point in the video series of videos we're doing, you understand why that is. We have a bearish cross. The red MA1 is now below the green BBC. That means we're going to go short. Our trigger to go short is the pullback right here to the BBC. And that pullback is going to be 1404.75. And price ultimately trades down to 13.99. So that's a total of 5 3/4 points. Now remember that based on the trade setups that we teach in the live trading room, this stop here would have cost you 2 points. This trade setup with these indicators, we never risk more than 2 points. So this cost you 2. This potentially gave you 5 3/4. Now, you'll hear me say sometimes that it's hard to take 5 points out of a 5-point move. Or, more correctly, it's difficult to take 2 points out of a 2-point move. You need a little room on each end. There's another side to that coin that I want to point out. If you entered here at 1404.75 and you got out here at 1400 and a quarter, that's 4.5 points. And then if you re-enter on this pullback here, and stayed into here at 1403, that's 4. So see, although the market from the original entry to the low, the total move was 5 3/4 points. But could you have traded it for 4? Took the secondary entry and grabbed another 4? Or grabbed 2 out of this and 2 out of this? The answer is yes, you could. Okay. I'm just showing you all the setups. The next setup, now hear me, 1 leg down, 2 legs down, 3 legs down. Do you really want to take a short here? Well, we're not even going to have that discussion. Pull back to the BBC without any discussion or any other indicators, simply a trigger. Okay, and that trigger is at 1402. Now, at 1402, if you get in at 1402, this pulls back to 1403.75. That's a 1 3/4 point drawdown. We use a 2-point stop. So are you still in the trade? Arguably, yes. And then what happens? Price drops from 1402 to 1475. So was there arguably a point in this if you sat through the drawdown? Arguably, yes. But you know what I'd rather do? Let's just say we got stopped out. Be done with it. Okay? Move on. Fair enough? Okay, we get a bullish cross. But on this bullish cross here, now, again, this is some of the finer points of trading. Is there an entry here? Well, you know, there is. But it would take some time to really explain that to you. So, we haven't been highlighting those entries, but I think you can see that you get a bullish cross. There's no air here, but yeah, you know what? Let's leave that for the live trading room. By the way, if you want to join us in the live trading room, go to cfrn.net/apply. cfrn.net/apply. You can join us in the live trading room for 1 full week. Download the demo platform, download the indicators, live data, all the futures markets, Forex, everything, you name it, it's yours. Absolutely free, no credit card required. Okay. All right, we get the bullish cross, but we don't get the official pullback thingamajig. So we're not going to count that one. Was it a trade that went really far? Yep. But are we going to count it? Nope. Okay. Bullish cross. This is your first pullback after the bullish cross. Okay. The entry is 1405.75. 3-tick drawdown. Okay. Pullback is to 1405. So you get in right here. Put the arrow. Okay, you take heat for 1, 2, 3 candles after you get in, and then off she goes. And when you get this close here above the MA1, you're feeling pretty good. Okay. Now the initial move from 1405.75 goes to 1409. So let's do the math. 1409 minus 1405.75. Okay, 3.25. 3.25 points. Okay. That's this little move here. And you know what? Look at the time of day. You might just be really good with that. In fact, if you took 2 points out of that 3.25 point move, you might be good with that and be done for the day. Okay? Now, secondary entry, or maybe you're in it for a bigger move, and so you never took your trade off here. You didn't take the 3.25 points that were on the table. You're still in it. Either way you look at it. We're just going to measure the next move. Well, we'll measure the total move. Total move goes from 1405 to 1417. That would be, call it 11 points. We'll call this 1406. Yeah. We'll call this whole thing here an 11-point move. See, everybody see that? Okay. But now let's measure it from the next entry, which is going to be right here. Okay. Now we're going 1417 minus 1406.75, and that is a 10.25 point move. 10.25. Okay. It's not noon yet. Okay, we get a third entry. Now remember, 1 leg, 2 legs. Are you going to go for a third leg? You can, but you don't have to. If you do, your entry is 1415, and actually the high on this move turned out to be 1417.75. So this little move right here is worth 2.75 points. 2.75. Okay. Then this pullback here would have been, okay, we got 1 leg, 2 legs, 3. This was actually the 4th leg. So you'd be going for the 5th leg here. I'm not even going to try to talk you out of it, because that's not the point of these videos. We deal with that stuff in the trading room and during your 3 months of training when you decide to become a partner. Pretty easy to see. The move was over, and so if you took the trade, you got stopped out for 2 points. Okay. Then we get a bearish cross. The MA1 gets below the BBC. The trigger to go short is going to be right here at midnight. Well, that's not actually midnight. That's 1746 Chicago time. Alright, so we'll go ahead and count that in today's activity. Alright, so the entry is here at 1413.25. $14.13.25, and price drops to $14.11. Okay, and now as you can see, it goes much further, and we'll talk about that when we recap the third. But for the purpose of giving a final recap for the 2nd day of April, this is going to be a move that goes from 1403.25 down to 14.11. So that's 2.25. Okay, that does it. We just recapped the entire day, April 2nd, 2012 S&P 500 E-mini futures. Lots of nice trade opportunities. We'll be back with April the 3rd, and today is actually April the 4th, so we are almost caught up. If I do one more video today, then I do 2 tomorrow, we'll be caught up, if I did the math right. Don't forget to carry the 1. See you in the trading room, cfrn.net/apply.